Hey everybody, it's Will at VIP Mortgage and it's time for a local lender update. What in the world is going on? I've been telling you for weeks that the tariff announcement on April 2nd was going to cause a lot of uncertainty in the market, and that's exactly what happened. Keep in mind, stock markets move way more dramatically than real estate does and way more dramatically than rates do. When I'm talking about rates improving, I'm talking about relatively small moves. A quarter of a point change in mortgage rates is a big move. We don't normally see that in a short period of time. We aren't seeing a whole quarter of a point of improvement. And in fact, the bond markets are trying to figure out how much they should react to what's going on in the rest of the economy. That being said, the improvements that I've been anticipating, that I had some hesitation on whether it was coming in the near term or whether it was going to take a few more months, those improvements are happening. And just like financial markets, when we see an improvement, sometimes there's a little bit of a pullback. And the market's trying to figure out, is this move warranted? Have we gone too far? Is this just right? And the bond market calculations are all about what should appropriate pricing be. Keep in mind, bonds are generally long-term assets. We're talking mostly about 30-year and 10-year bond prices. Those are shifting, and we're getting close to the targets for the year. What does that mean? It means that it increases the likelihood that the Fed will cut rates in the future, just like in the fall when we anticipated the Fed was going to cut interest rates for the overnight lending rate. Though the improvements in the bond market happened before the Fed actually cut the rate, because they're always trying to anticipate where are things going to be, not just where they are today. And so what we're waiting for is we're trying to figure out, can we sustain these improvements, and are we going to see a little bit more improvement? I think we are. The uncertainty in the market is certainly a net positive for mortgage rates, and I think is going to shake out a lot of resistance that we've seen to appropriate pricing, right? After the Fed started cutting rates in the fall, all the way through the end of the year, they cut rates 3 times, and mortgage rates went up, not down. So the mortgage rate pricing has actually been out of whack with the actual fundamentals, and I think we're seeing a right sizing of mortgage pricing based on actual conditions. The good news, right? There's always good and bad news. You got to look around and not just pay attention to the headlines. The good news is job creation was way higher than expected last week. Why is that good news? Because the actual economy is doing pretty good. People are hiring, and they're hiring more than expected. When there's major shifts in policy, it often takes time for the market to readjust to conditions. We're seeing some of that adjustment happen way faster than I would have anticipated. So the strength of the economy is actually pretty good. I've had a few people ask my opinion on the stock market, and my opinion for months has been that it is overvalued and it's overdue for correction. If you look at the stock market charts, that's fairly obvious. If you know anything about the stock market, we've been on an upward trend even when things like an inverted bond yield curve or negative GDP growth from last year did not move us toward recessionary pressure. Recessions are a normal part of the ebb and flow of an economy, and we're about 4 years overdue for a recession. They happen at regular intervals, and part of the reason they haven't is because of a change in economic policy on the federal government level, where they've been stepping in and trying to artificially stimulate the economy. So are we going to see a recession? I don't know. What the government has been doing has been designed to try to prevent one. So if they change their direction, which it looks like that's what's happening, then I think the likelihood increases. Overall, though, in our business, we deal with long-term decisions. Buying and selling homes isn't a decision made on whether markets are up or down. And when we're talking to clients and they're feeling anxious and they're maybe upset because their investment portfolio is taking a hit, it's a great time to talk about why real estate is a much more stable, consistent, and predictable asset. Even in recessions, real estate generally appreciates. There can be variations in local markets, and sometimes our local markets are overvalued and they need to correct. It's all part of the process. But bad news sells, and a lot of people will click on negative headlines and they will get spun up. It's our job to give them some perspective. As you know, I do a lot of research on the economy. I'm always glad to be a resource for you and your clients. So if there's anything I can do for you, just give me a call, 719-232-7553.